Hey, Bulls and Bears. JJ here, and we're chiming in today on Saturday with a little bit of a economic update. And the economic storm is still getting darker. Not much is going to slow this down from this point, and we're now seeing the layoffs increase, and the layoff storm is going to get a lot worse, especially as we get into the second half of the year, going into the end of the year. It's going to be madness. Now, the average person out there that really doesn't pay a lot of attention to the economy is still under the belief that things are getting better, that all the bad stuff that we saw happen was because of the health crisis and not because of the war, the inflation, the rising cost of living. Well, now we're seeing markets come down and people are beginning to wonder what is going on? Why would so many big holders of stocks, so many whales as they call them, uh, billionaires holding a lot of stock, why would they all sell off at once? What's the big deal? Unemployment's low. What's the panic? Why are people freaking out? Why are there sell offs? And why are so many people losing so much money so quickly? Something doesn't seem normal. Well, it's not just the markets. Now we're starting to see layoffs increase big time. Let's go ahead and take a look at a chart. Now we're looking at a chart here of layoffs, and this includes the number of employees laid off per month, and that's the red, and the number of new layoffs, and that's to the right here in the blue, and that's just the number of companies that are announcing new layoffs. Now, if we go back to the emergence of the health crisis, of course, we saw a big spike and a big boom in layoffs because of everything happening, the shutdowns, the close downs, the freeze up in the spending, and everything that went along with that. But we look here in just the past few months, we're seeing a big uptick in layoffs right about the same time as the market started dropping. Remember, back in February, we called the top of these markets. We showed you the topping pattern, and we were correct. And why did we know this so well? One, we looked at the pattern. Two, this was all money creation and easy money and rock bottom interest rates that created this, what looked like a booming economy. Now, people say the economy's booming. Well, sure, if you call people going out getting loans, going into debt, and therefore spending money because of the easy money, and when you have asset booms like the housing market, when the stock market's booming, when other assets are booming, everybody feels rich, people are spending, people are more confident in taking out new debt. And what happens when people take on a lot of debt? Well, it makes the economy look good because they're spending. Well, now the reverse is happening, and companies see this uncertainty and they see this market's falling and they see the debt levels and they see the rising rates and they know that the good times are about ready to come to an end. So now we've got rising rates at the same time as now most people are in the most debt they've ever been in history. We're at all-time high debt levels. Now you may be saying, JJ, this is exaggeration. I don't have hardly any debt. And in fact, I'm debt free. I pay off my credit cards every month. Well, guess what? If that is you, you are in the minority. You are one of the few because most people carry debt. And of these people that are carrying debt right now, most of them are in the most debt they've ever been in their life. All of these huge mortgages that people took out, the credit card debt. Now, credit card debt is mounting faster than we've ever seen before. And everything is hitting all at once now. Layoffs are surging now, and it's just going to get worse. This chart will continue to increase. We'll look at it again in a few months. Rising rates combined with this high debt. How are people going to handle this? Rising prices. We told you with the flu outbreak throughout the poultry farms, we showed you that egg prices are going to go up. Recent report. Egg prices just went up another 10% as food prices rise across the US, but this latest sticker shock at the supermarkets and eggs and poultry aisles as this bird flu wreaks havoc on the country's egg laying and hen stock. And consumers are also starting to realize what's happening. Consumer sentiment now is at a 11-year low. People see how much debt they're in, they see the rising prices, and it's not a good combination. Even with a unemployment rate that's really low historically, people feel it in their gut that something isn't right. Even people that believe the official unemployment number, they believe that's the real number, still they feel it and they know something isn't right just by looking at their own finances, the cost of living, how much debt they're carrying. And it's no coincidence that we see this consumer sentiment take a dive. Now, why such a big uptick in layoffs and hiring freezes? If the economy is doing so great, the health crisis is fading. This doesn't make sense. What's happening? Let me put it to you as it was explained in a recent article out of Forbes. Corporate executives and hiring managers crave certainty. They want to know what the future looks like and they want it to look bright. If management feels that the economy and events align so that their business will make money and prosper, they'll aggressively invest in hiring more staff. But when there's high demand for their products and services, smart leaders will add a headcount and keep stoking the growth. Conversely, when the C-suite is concerned about the future and worried that things may take a turn for the worse, they'll realign expenditures. This includes cutting back on hiring, culling the workforce, and cutting costs. Executives will say that once the situation improves, they'll start hiring again. Until then, management will hunker down, conserve resources, and wait out the bad times. And we see more surveys like this one here out of Bloomberg. U.S. recession odds within the next year are now 30%. And this is a monthly survey put out by Bloomberg, and it surveys many different economists. Folks, continue to prepare. I'm not telling anyone how to spend their money, but get ready to get laid off if you have a job. Prepare to get laid off. Prepare to lose your job. What's going to happen? Will you be able to pay your rent, your mortgage when you lose your job? Think about that. And if you think this whole thing is just going to reverse and things are going to start getting better, costs are going to come back down, companies are going to turn around and start hiring again, please let me know down in the comments what's going to happen to reverse the course that we're on, to reverse this trend. Please let me know. I'm always looking for good news. I love good news. And if you put it down below in comments, I will report on the good news and report on what's going to turn this around and make things all get better. I'm looking forward to reading your positive outlook and explain to me how things are going to get better. And we'll see you next time here. Thanks for watching this report. Bull, boom, bear, bust. See ya.